Next, what we're going to do is we're going to take a look at a sales allowance. A sales allowance. And if you remember through the last lecture, the only difference between a return is allowance and an allowance is the return affects the actual product. The product is being transferred back to the seller when you have a return. When you have an allowance, the actual product stays with the buyer. So no product is involved in terms of exchanging when you have an allowance. You just really, the seller's just knocking an amount of which is owed to them because of some particular situation. So it doesn't affect inventory. Now remember, we saw how to handle a purchase return and a purchase allowance. Now we're on the other side of the gun. So let's say that it is May 6th. And now we're going to do a sales allowance. Suppose that we granted a $500 allowance. Suppose that we granted a $500 allowance. What are the key words? Granted allowance. So who gave the allowance? We did, right? So how did us giving an allowance affect us? Now, will inventory be involved with this allowance? No. No inventory is involved because the purchaser still has it. So how will this affect us? It's going to lower our revenue, and it's going to lower the amount that's owed to us, our receivable. And so, again, we never touch revenue. We use the contra account. This is a contra account. So we're going to debit sales, return, and allowances. And we're going to credit accounts receivable. There's only one number here, so it's very easy. $500. All right? Now, do we have to put inventory back on the books? Absolutely not. Absolutely not. Okay? And remember that sales return, just like sales discount, affects revenue. By decreasing it. Contra account to sales revenue. Okay? And don't get caught up with the confusion. Why do you think they call it sales return? Sales return and allowance, sales discount. Ask yourself, why do you think they call it? Because that's the person who is given the what? Sale. That's the person that's on the selling side. So don't confuse a sales discount with a purchase discount. They gave you a name so that you don't. So you only debit sales return allowance and sales discount when you're on what side of the gun? The selling side. The selling side. Okay? So be careful with the wording. It is all about the wording in accounting. So let's wrap this up. And let's identify collecting outside of the discount term. So let's assume that it's May 15th, and this is a collection outside discount term. Remember, we had 10 days. May 15th, started on May 1st, way outside the discount date. Let's suppose that we collect the remaining suppose that we collect the remaining amount. Let's suppose that we collect the remaining amount. So first we need to analyze an account that consists of what is owed to us. What are we collecting? What's another word for collect? Receive. So let's handle and let's account for our accounts receivable. So let's check out our ledger. Let's check out our ledger. So, accounts receivable. And I'm trying to do all this by memory because I'm freestyling all of this stuff. So, I think we started out with $10,000, right? Then, what happened? We had a collection of $4,000. Then we had a return of $1,000. Then we had an allowance of $500. And I think that's pretty much it, right? And so obviously as we can look, we can note that our remaining balance that's owed to us is that $4,500? Yep, $4,500. Okay? So how are we going to journalize this? This is outside the discount terms. So will we extend them a sales discount? No, outside the discount terms. So we're going to record this like a normal collection on the account. We're going to debit what? Cash. Credit what? Accounts receivable. For how much? $4,500. $4,500. $4,500. And so now you have both lectures where you can analyze the exact same transaction, but on different sides of the gun. On the test, you will have to identify what side of the gun I'm on. So as you read these descriptions, your first rule of thought should be blah, 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 blah. Okay, am I a purchaser or am I a seller? Purchaser or seller? Then you could identify the keywords. Then you could identify how the accounts are affected. Then you could actually do proper recording. Okay? And so this kind of summarizes chapter 5 in essence. There's only another thing that I want to talk about, and I'll do that in another series.